Kate Kelly, a lot has happened to the commodity market since you published the hardcover version of The Secret Club That Runs the World last year. Most notably is that commodity prices have really fallen off the table. So tell me, did you top the market last year?
Unintentionally, I think that I may have, yeah, because the book came out around last June, and really that's when you saw the top, certainly in the oil market, but I was looking at the GSCI today, it's off 35%, I believe, last 12 months. So yeah, it's really, you've seen really a crash. And it's been across the board. You know, copper recently hit a 6-year low, which is an important indicator, obviously, but I've focused quite a bit on the downturn in energy, what that's meant for drillers, obviously what it's meant for hedge fund managers and others in the so-called secret club who trade on this commodity version of the stock market.
Well, can you drill a little bit deeper into what the crash in energy prices has done to the hedges of the world?
Yeah, absolutely. I mean, I think for some it was actually a great opportunity, right? I mean, Pierre Onderon, who's one of the stars of my book, who founded and succeeded masterfully for a while at Blue Gold Capital, has since started in a new incarnation, Onderon Capital in London. He essentially called the downturn in prices that followed the OPEC meeting around Thanksgiving when OPEC decided to keep their production relatively high. And then, of course, you saw a big leg down after that. Others saw that coming too and really made a mint for 2014. This year has been a little choppier, but I guess the broad answer is you've seen some more people fall away from this particular profession because it's still volatile, it's become more difficult. At the same time, though, as I argue in my book, those that are well capitalized, who have sort of that extra knowledge, particularly if they've been in the physical market and they have the benefit of knowing when those turns might come, they're still doing pretty well.
Let's talk a little bit about the miners and specifically gold. John Paulson, who supposedly made the greatest trade ever, by shorting toxic mortgage bonds. He went deeply into gold. Gold hasn't really gone anywhere in the past year. So talk about what's going on in the metals market.
Right, so gold, of course, was going to be John Paulson's next big thesis, right? His big macro thesis that when the system was pumped with new money supply, fiat currencies would eventually weaken and gold would strengthen. He was right to a point, right? He bought it in the $900 range, and it went up to the low 1900s in the third quarter of 2011, only to kind of really peter out, as you said. In terms of metals, it's been a tough slog. And I think for some of the producers that I talk about in the book, for example, Glencore, it's been a huge issue. You know, iron ore, copper, a lot of these base metals that are crucially important to the mining companies have really sank. And until they can sort of ride out this cycle, that really could be difficult from a margin standpoint.
Has the so-called secret club been revealed to a certain extent, not just from your book, from the fact that people know that Goldman Sachs was running a tin can business? You have regulators looking all across the commodity chain right now. Should we feel better that there's more knowledge out there about this so-called secret club?
Yes. I mean, I would say a couple things. I do think the U.S. government has sort of taken notice of this group of players. And as you mentioned, you know, Carl Levin with his permanent subcommittee on investigations issued this sort of scathing report about banks in the commodities business, and Goldman's aluminum business was a key issue. The Fed has really discouraged banks, basically told them you need to get out of physical commodities, which they're in the process of doing. As a systemic safety measure, that's probably a good thing. I think still a lot is lacking when it comes to just the oversight of paper trading. The CFTC Commissioner Mark Wiegand had an op-ed in the Journal this week talking a little bit about their limitations when it comes to real-time market tracking. That agency, I think they got a small budget hike in the last year or so, but essentially they're extremely underfunded compared to the SEC. And while I'm not defending their work or saying that they've done the best job historically, really, it says something about the markets that when you're regulating a $600 trillion over-the-counter derivatives market versus the U.S. stock market, which is far smaller, you have just a fraction of the resources. That sends a concerning message.
And then finally, what do you think is the next game that this secret club is going to play in? Because one thing we know about Wall Street is they move from game to game across this big casino. So for a while it was mortgage bonds, then it was commodities. Where do you think these guys are headed next?
You know, that's a good question. I do still think there's a lot of opacity in the derivatives market, so that's certainly an area to watch. Within commodities, I spoke of the CFTC and the SEC. Those, of course, are U.S. regulators. There's not a ton of oversight when it comes to the overseas markets. London may be an exception. Parts of Europe may be an exception. Look at China, though. I mean, this week, what's been happening in China with the stock market embarking on a huge rout for the last several weeks, the government trying to mandate some new controls to halt stocks, provide liquidity to brokerages, whatever. That's a market that's hugely powerful as a macro trigger and a macro player, yet foreign investors aren't terribly involved. Nobody tells the government what to do. They're a crucial buyer of commodities, and yet there's just not a lot of transparency as to what's happening. So I think that commodities are still an area to watch. I think derivatives are going to be a key area to watch. In terms of the new product mousetrap, not sure yet, but I'll get back to you.
All right, thanks a lot, Kate.
Thank you.
And thank you for watching The Street.